Joining us from Dubai is Ziad Awad, CEO of Awad Capital. Ziad, welcome. Let's start with Powell's statements last week that changed market expectations regarding the likelihood of interest rate cuts. You mentioned December. What are your expectations for December and the number of cuts for 2025?
The market always reacts strongly to expectations. Because at the beginning of the year, the market expected there to be 7 interest rate cuts this year. Now we have had 3 cuts, and there is doubt whether the 4th cut will happen or not. In my opinion, the 4th cut will come in December. Or rather, the 3rd cut will bring us to 100 basis points. And next year, I don't think it will be less than 50 points, meaning 2 cuts of 25. This is slightly more than the market's expectations. Why does this happen? The market always has this tendency to increase expectations in optimism and pessimism. And of course, today there is a lot of uncertainty regarding several factors. One of them is, of course, inflation, which is the main focus of the Federal Reserve. The second is the new US government policy, which we first do not know who will be in the government, and secondly, it will take time to see what their policy will be.
Regarding US Treasury yields, we were seeing some declines, but recently there have been increases because they are pricing in the return of inflation and fewer cuts from the Federal Reserve. For you, what is the optimal investment mix between risk and yield?
The question is good, but the yields are almost on the curve, meaning they start at 4.5, drop slightly to 4.25 or 4.30 for 5 years, and then return to 4.6 or 4.5 for 30 years. However, the curve is completely flat. It's not independent or non-independent. The question is not about yield, but about risk. Complete the best short-term yield, which is any level between 2 and 5 years. I believe this is a good factor between yield and risk.
To the Gulf now, where do you see opportunities in bonds in the region? Are they in sovereign bonds or corporate ones, especially banks? Recently, we have seen many issuances from banks, especially in Saudi Arabia, to expand the financing base in AT1 bonds. What do you think about pricing as well?
In general, I prefer sovereign bonds and senior bonds if they have a bit of yield above the sovereign bonds. I believe the AT1 bonds are a bit risky and not for all investors.
As happened with Credit Suisse, but of course this scenario had its benefits and risks. What are the most attractive markets for you now in terms of the shift from bonds to stocks?
Good question. I believe the level we have reached in bond yields for the first time in a long time shows a balance between bonds and stocks. Today, a portfolio could be 50-50 or 60-40. Because the biggest risk to stocks today is an economic downturn, for example, a financial crisis, due to historical factors or inflation. The second risk is that this strong dependency we have seen in America is starting to weaken little by little. If this weakness continues, the stocks will drop to very high valuations during times like this. Diversification is very important for investors, especially the diversification of bonds and the amount of diversification between the US market, which is of course the largest market in the world, and other markets in the world like China or India, or other emerging countries. I am still a bit cautious about Europe, knowing that the economy here is very weak and has many problems.
Yes, Ziad. What are your expectations regarding the movement of the dollar? Have we reached the peak, or do you expect more gains for the dollar, especially in light of Trump's inflationary policies?
The dollar is the hardest thing to predict because there is a mix between interest rates, policy, and inflation as well as the interest rates of other countries like Japan. I feel that the dollar has reached a very strong level, and this is not in Trump's interest. He doesn't want the dollar to be this strong. So we need to pay attention to this. Of course, the new US government policies will be inflationary and will reduce interest rates, thus strengthening the dollar. But on the other hand, this government wants the dollar to be weaker because a weaker dollar benefits American companies. So the direction from here is difficult, but in my opinion, the dollar has become very strong, especially in Brazilian real. Thank you very much, Ziad Awad, CEO of Awad Capital.